for me, when I do the pre-qualification to see if you qualify or not, I look for your income. I look to see how much assets you have, and I look for job history, and how much you make. So all those things, I'll come up with a number basically of how much I think you may qualify for. I mean, I'm not exactly sure all the time because we don't know what the payments will be because there's different things that gives me the payment. So the payment is called PITI, which is principal, interest, taxes, and insurance, right? So your principal and interest, of course, is your mortgage. That's me. But then your taxes divided into, if your taxes are $12,000 a year on this property, you divide that into 12, of course, and that is your monthly payment is $1,000 just for taxes alone. And of course, there is your insurance. You do the same thing by dividing it into 12. So sometimes I don't know exactly what it will be, but I can surmise by the different areas that you're going to be purchasing and what you qualify for from there. Does that make sense? Mm-hmm. Yes, thank you. Mm-hmm. All right, so normally we'll have a conversation, what you're looking to do, what's your plans, what's your goals, and we'll wrap it around there and what your monthly payments you're looking for. I would try to look at your monthly payment for what you're renting now, for the people that are first-time home buyers, because when you're a first-time home buyer, you really don't know, right? You're really just like, just please help me. So that's where I start out, is what you pay for your rent now, and that's comfortable for you. And what I do also is, so I'm briefly going to do this. You can always call me or email me at michael.douglas with one S at td.com. You could, what you qualify for, I would times your income by 43%. So if you make $10,000 a month, I would times that by 43%, and that's the income I can use for your mortgage as well as your credit card debt. All that's together, and that's how I qualify you. So I reverse the numbers basically to qualify you. Does it make sense? I know it doesn't make sense to a lot of people, but that's how I qualify you. If you need more information, we can talk about that. All right, so you come to me. I give you a pre-qualification. I talk about different programs that you may be. There's first-time home buyer products you may be able to do. There's one with 3.5% down. What if you already own a property? I would qualify you on that property. So the question, I guess, is, I'm not sure if that's to me, but since I'm talking, So the thing is, I would still qualify you with that property too. And usually you're going to get rent from it. So I would qualify you showing that you're getting the rent from that. Thank you. I will qualify you getting the rent from that. That's how I would qualify you. So anyway, let's go back to how I'm qualifying. So I do 43% of what your income that's coming in, right? So if you have a rental property, I do part of it also. I do 75% of that income, and that goes into that portion where you have your income, and I times that by all that by 43%, and that's how I go and get you to know what you kind of qualify for. Loan size, right? So that's the loan side.
I don't want to answer. I'm sorry.
No, we good. So I think I was stumbling there, and I just need a moment to do this. Go ahead.
Yeah. So I just want to be clear when you say the homeowner. To Kelly's question. So if you're already a homeowner, the application process is also based off of your home as well. You include that as an asset or as part of income?
Both.
Okay.
So the question is, do I do it as an asset and income? I do it as both. And you'll see it on something called a 1003, which is the application, and you'll see both of those informations on there as an asset and also as income. Awesome. So yes.
Okay, cool.
So that's why it's good to have more than one.
I hear that. So I'm like, okay, take it.
All right, so we're still qualifying, right? So I told you how I qualify you. I told you how what it takes for me to get income. Now I look at your credit, of course. I want to see how many. What's on there. So I'm looking at your minimum monthly payment. That's also what's on what I qualify you for. And also scoring. A score plays a major part of it, of one getting a better interest rate and also get a better product.